Hi there, you're watching the daily edition of Your Trades on ET Now. This is Priyanka Kapil along with me, Snehi. We did see a volatile session. Indices, in fact, moved in both the direction. Either side of the moves we saw, but in a very tight range. This is exactly what we were, Snehi, discussing yesterday. There could be a consolidated session because, you are able to find a support at the bottom and there's a resistance. So there was a range of 100, 200 odd points only, which was visible with the kind of derivative action we saw yesterday. And exactly that's what happened. It was a very tight range of 150 odd points on Nifty, even on Bank Nifty also, and that's what we saw. We did attempt to go higher, but then it could not sustain at the levels. A pullback came in, and again we attempted. So it was all in all, it was a volatile day, a consolidated a session which was in a tight range, a consolidation of session what we saw. But if you look at the sectoral moves also, in fact, there were very modest kind of gains coming in on all the kind of sectors. In fact, if you talk about the advancing sectors as well as the declining sectors, very modest gains. In fact, the maximum impact towards the gaining side you could see was on the Realty index, which moved 1.2%. And on the flip side, you could see media or pharma, which was falling 1.4%. Otherwise, just a modest gain or maybe a modest loss. PSU Undertaking, NTPC, Power Grid, they were the top gainers. Trent was the top gainer on Nifty, majorly on the Elara note. We did see brokerage notes and impacting stocks also. Macquarie came up with the note on QSR space, talking about channel check pointing to recovery in the month of December, which could be reflected, and hence they gave out perform rating on Devyani International, Sapphire Food. Nuvama came up with a rating on a note on BSE, and this was the second consecutive day when we saw brokerage bullish note coming on BSE. It was a buy with a target of 6730, and they're citing many reasons. Multiple reasons was a dominant star MF platform, which could expand to a 30%, 31% of CAGR. It could grow in another 2 years or so. MK came up with a report on a note on Dixon Tech. Target was 20,000, and they speak about the further legs to growth story. So wherever there were bullish notes, stocks were reacting, and wherever they were on the flip side, like Goldman Sachs had a sell note on a stock on Credit Access Grameen, and that's what we saw. It got impacted also. Banks, private banks were though still safer if you see.
Absolutely.
I'm sorry, on the flip side.
On the flip side, yes, exactly. Because Axis Bank, one of the biggest private bank losers, we had a block deal that happened during market hours today, and you of course have the quarter 3 earnings from Axis Bank coming tomorrow. So that stock was in focus. That stock was dragging down and also taking the entire Nifty Bank down with it. We can't say down for Nifty Bank because we've ended rather flat when it comes to Nifty Bank overall. So that's what Nifty Bank was doing in today's trade. Rather than that, a couple of more buzzers in today's trading session. NBCC has received a work order of 405 crore rupees. So that stock was up in a way, doing well. Persistent has introduced a new AI-driven contract management solution. Very good move coming in on Persistent on an intraday basis. There you have it. Minda Corp is going to be acquiring 49% stake in Flash Electronics for a sum of 1,372 crore rupees. That stock has also done very well in today's trading session. Adani Green, of course, their arm has commissioned 57.2 megawatt wind power capacity. So on the back of that capacity expansion, Adani Green was another stock to watch out for in today's trade. Of course, like Priyanka mentioned, QSR was in focus. Devyani International was one particular stock among the entire space which was up and away in today's trading session. You also had the cement sector in focus. JM Financial has initiated a buy on Ultratech and Ambuja. Both of those stocks also doing pretty well in today's trading session. And Trent, of course, was in focus on the back of an Elara Capital initiation coverage coming in. Target price of 8,500 rupees. So the broader take here is that whenever the market is range bound, it is a select pocket of stocks. So certain pockets of stocks, like Priyanka mentioned, you either have a brokerage brokerage note coming in, news flow coming in, it could be an earnings candidate. There has to be some reason-driven move that a stock will see in, because the overall market is rather flat. But that is what the outlook is on the market right now. That's how we've summed up today's trading day. Let's also take it across to Amar Singh, who's joining us on the show, Senior Vice President Research at Angel One. Amar, hi, thanks so much for joining us on the show. Give us a sense of the moves that we've seen today. It's not surprising that today's trading session has been rather range-bound. But where do we go from here? Because while we've not fallen today, we've not done incrementally much today anyway. So where do we go from here? Do you believe we are going to be stuck in a range going ahead for the next couple of trading sessions? Or is there some light at the end of this tunnel?
Yeah, I would say that definitely there's light at the end of the tunnel, but I think we still have some way to go, further way to go, because if you look at both on the technical side, so what we are witnessing, I've been speaking along these lines for quite some time now, that the intermediate term trend that's on the weekly charts, we've seen some very negative technical indicators. So those clearly point out that even if there is a pullback, sustaining isn't going to be easy. So higher levels are likely to be sold into. And what we saw recently was that the earlier low of 23,233, that was taken out recently. So clearly it shows that higher levels are being sold into. And also if you look at the macros which are driving the markets, be it the corporate earnings or the slowdown in growth, or the rupee depreciating towards record levels, and also the FII outflow. So these are some factors which are playing out on the markets. But at the same time, I would say that 23,000 should act as some support, but we are very close to that. Taking that out, yes, then we could witness anywhere between 400 to 600 points correction in Nifty on the lower side. On the upside, for any trend change, Nifty would have to sustain above the 23,600, 23,800 consistently. Then we could say that there is some semblance of a trend change. Otherwise, higher levels will be sold into, and it's going to be more specific, stock specific than anything else. What we are seeing, however, on the Bank Nifty is that Bank Nifty is also trying to find some support. So for Bank Nifty, the support is somewhere on the 48,000 levels. Earlier, Bank Nifty had made a low of in June of 46,000. So post that, this is the recent low, 47,900 or so. So 48,000, 47,800, 48,000, that's going to act as a support. But as I said, sustaining about the higher levels, markets would look for some fresh positive triggers. And also, you have the budget. We really don't know what much to expect from the budget, given the constraints in terms of the rupee depreciation and all that. So I would say one needs to be, but again, as the point is that, yeah, we've seen some stocks correct significantly. So there's good buying opportunity as well.
There could be some buying opportunity also, absolutely. In fact, Amar, we were talking about it, that there could be a tight range in which the indices could move, the kind of action we've seen from the derivative space. And from your words, what we can see is that still, the market needs to climb that wall of worry, that resistance level to at least show one-sided move. But where is those pockets which you're talking about, where correction is giving an opportunity for viewers to buy?
Yeah, I would say that FMCG is one space. I think we've seen some positive momentum there post the sharp correction, because the likes of, I would say, name any of the major FMCG stocks, be it Britannia, Nestle, Colgate-Palmolive, HUL, and Marico, Dabur, all have witnessed significant corrections. Now we are witnessing some sort of pullback. So these are stocks where there could be some fair amount of buying interest. Also in the auto space, I would say the two-wheeler space, there also we are seeing some sort of, I will not say positive momentum, but some sort of consolidation happening, be it Bajaj Auto or TVS Motors. So these are some areas. And the other sector, I would say, is the pharma space. Pharma space is one space which is doing quite well. Amongst them, if you look at Biocon has been holding up quite firm, and it's taking out some recent, I would say, highs. So sustaining above 380 is important. Sustaining over this level consistently, it could rally anywhere between 10%, 10 to 12% on the upside. So this is one stock one can keep a close watch on. And apart from that, I would say we are seeing some traction coming in the banking space, and that more so on the PSU banking space. So, but that is more, I would say, related to the news trigger which had come in with regard to the divestment. So I would say these are some sectors one can definitely keep a close watch on.
For sharing your market view as well as your sectoral outlook with us. On that note, we'll let you go. Thanks for joining us on ET Now. Time now to slip into the word from the wise segment. And today that is Vikas Khemani, the founder of Carnelian Asset Management. We interacted him with earlier in the day, and he believes that most of the correction is behind us and the broader market may see further correction. He also believes that the Nifty won't break 22,000 and will be in the narrow range. Let's go across and listen in.
I believe that the bulk of the sort of correction is behind us. Of course, you can never say that this is this is over, how long it can last and all. But we are. This is in the backdrop of a great, last 2-3 years. We have had great run over last 4 years. So when you have this kind of market, it is quite natural to have this kind of correction coming in the market. I mean, we have a little bit of global macro uncertainty with the due to a political change, so how that will pan out. We've seen a little bit of change on the interest rate side. So all those things, I think, in my opinion, are likely to be around in the next couple of months. And that will basically kind of cause markets to remain either correct a little bit more or remain sort of in a very narrow range. And so I do believe that while index might hold on, there could be some more space for correction in the broader market. So I think there are kind of interesting opportunities which are emerging and will emerge in the next couple of months. So one has to keep watch. And
Okay, so the larger part of correction is behind us. This is what Vikas Khemani had to say. Of course, looks like some good comments coming in the market like this.
Especially when he said we won't break below 22,000. That's a
big respite coming
well,
in.
Yes.
We stay for a short break here. When we come back, we get you the action from the derivative space as well as the counter. They were buzzing in trade today. Don't go anywhere. Welcome back. You're watching Your Trades on ET Now. Now let's get you the big story of the day. That happens to be the BSE. Of course, back-to-back reports, bullish notes that we're watching on BSE, and Nikunj Dalmia also gave a take on it. BSE actually was in focus because, the latest note which came in from brokerages wherein Nuvama has now initiated a buy rating. They've given a target price of 6730. Before this, Jefferies also upgraded the stock to hold. Now, what does it mean for the stock going forward? Let's revisit Nikunj's take on the same. Listen in.
The fact that volumes will come down is yesterday's data. The fact that volumes will come down more because of the SEBI regulatory changes, that also I think is something markets have incorporated. Markets are smart. They know that what will happen to the broking business and what will happen to the entire security business in terms of the brokerage income. But for BSE, I think it's the IPO pipeline which in a sense is going to be the differentiating factor, and there is no evidence right now. And when we spoke to the BSE chairman, that will slow down. Second, the SME IPO, it is a real deal. While we may argue about fraud, valuations, exchange doesn't care. I mean, for exchange, it is a listing where the market discovers the prices and then they list. I mean, exchange is like in highway. They create an highway for you, and frankly, they don't control what goes on it or what does not go on it as long as the due diligence is done. So that's the second part in SME. Third is they have a large platform, which is Star MF platform. Yes, sir. They are also in selling mutual funds, one of the largest, mutual fund platform. And I think diversification should also come in towards insurance sooner than later. But for me, I think it's the NSE non-listing which will keep on making BSE more attractive. While NSE may be very active in the unlisted market, as we say, but for NSE, the damage has been bigger in terms of impact analysis, but for BSE, damage is less. And in the foreseeable future, you can make an assumption that there's no clarity on when NSE would list. So that, in a sense, will give BSE the only listed entity advantage, like we say in science and markets, also the TINA factor, lack of any options, and which in a sense will continue to command this premium for that stock.
Okay, so that's Nikunj's take on where BSE is headed after the back-to-back bullish notes that we've been seeing from brokerages. But let's also talk about another brokerage note that had kept the stock Devyani International today up and away in today's trading session. Other than Devyani, also a couple of other QSR names, the likes of Sapphire or Westlife Foodworks, they were all in the green today, but it has been a through and through day for Devyani International coming in because Macquarie has initiated an outperform rating, target price of 230 rupees per share. They see healthy EBITDA growth for Devyani International, which is the largest Yum India franchisee, and also healthy EBITDA growth for KFC, driven by favorable geographies and competitive position in the chicken space. Now, while they flag off that Pizza Hut may take longer for a turnaround, they see upside possibilities in other brands that Devyani operates, like Costa Coffee, Wango, and other brands. They've initiated an outperform on Devyani given the near average EV EBITDA valuation and their outlook for high teen EBITDA CAGR in Thailand over the medium term. And Devyani International continues to be their top pick in the QSR space, followed by Westlife, Sapphire, and Jubilant Foodworks in that pecking order. For Sapphire too, they have initiated an outperform rating with a target price of 390 rupees per share. But while they are very bullish on Devyani, they've also flagged off some key risks for this stock. They say that there could be a sharp rise in royalty rates, which could hamper the stock, and some increase in competitive intensity from peers could also do harm. Meanwhile, they're also flagging off a brand boycott call linked to any geopolitical issue, and that may risk the same store sales growth, which is the SSSG. So that's the outlook on Devyani from Macquarie. Overall, very bullish note coming in. Initiated an overweight with a target price of 230 rupees per share.
Actually, note was very bullish. Don't remember when was the last time the Devyani would have popped 8% or so.
Absolutely.
Absolutely. Well, let's get you another stories, especially on the Minda Corp. Srishti, helped us understood, how auto counter Minda Corp is buzzing in trade today after the company announced that it would buy 49% stake in Flash Electronics. Srishti is here with us to give us more details on that. Srishti.
Well, yes, positive news flow coming in on Minda Corp, where the company has announced that they're going to be acquiring Flash Electronics for a cash consideration of 1,372 crores. This is definitely a positive announcement coming through because Flash Electronics does have its presence amongst the two-wheeler, three-wheeler as well as four-wheeler segment. It has around 8 manufacturing facilities, not just in India but on abroad as well. And Minda Corp is also saying that this investment is a strategic partnership and would help unlock some of the synergies. Now, if we see the product portfolio of Flash Electronics, then it does not only comprise with the ICE part of the portfolio, but even it has the EV offerings. And we also believe that Bajaj Auto is one of the major contributors or the key clientele for Flash Electronics. And other than that, they also have tie-ups with Yamaha, Eicher Motors as well as Maruti Suzuki. If we talk about some of the numbers then as per the analyst, the company margins should stand around 14 to 15%, which compared to Minda Corp's consolidated margins of close to 11% should definitely be EPS accretive. That's what our analysts are highlighting to us. And they're also highlighting that given the company's past record in terms of the turnover, the company has also seen a good growth. So all in all, a good acquisition coming in for Minda Corp, and definitely the stock is reacting the same way.
Absolutely. Minda Corp for a day it's had on the back of this acquisition news flow that we've seen today. But on that note, let's also talk about a lot of other stocks that are in focus, and Ravinder is standing by to take us with that list. Ravinder, take it away.
Well, on back of order win, NBCC India is in focus, where company has won an order of rupees 405 crore for 5 different projects, and with this NBCC has achieved the monumental milestone of rupees 1 lakh crore order book on consolidated basis. Moving to next, Persistent System is also in focus, where company has introduced AI-driven contract management solution called Contract Asset using Microsoft 365 Copilot. Apart from this, Dixon Technology is also in focus, where MK has initiated a coverage on Dixon Technology with buy rating with target price of rupees 20,000. MK says that the multiple enduring mid to long term drivers yet to be backed in, and the Dixon is expected to capture 70 to 75% of the incremental market share, increasing its overall market share to around 44% by FY35 compared to 25% currently. Moving to next, Trent is also in focus, where Elara Capital has initiated coverage with buy rating with the target price of rupees 8,500 on Trent. They say that the Zudio is expected to remain the largest player in fast fashion and grow faster than the industry, and the share of fast fashion in the apparel industry is projected to increase 14% by FY27, which is 10% in FY24. And they say that the trend is expected to post a revenue CAGR of 27% between FY24 to 28. And lastly, Nazara Technology is also in focus, where the subsidiary Fusebox game partners with Banijay Rights, the global distribution arm of the content powerhouse Banijay Entertainment, to develop and launch the first ever Big Boss interactive fiction game.
Thanks very much, Ravinder, for all those highlights on the stocks. With this, it's a wrap on this edition of Your Trades. Thanks so much for watching, but do stay tuned to 18 Hour for more business updates.